It's still the center of every conversation because of its unmatched network security, the fixed supply, the institutional adoption narrative, the role as the primary risk on and risk off benchmark for the entire crypto market, and the simple fact that almost every other asset still moves in relation to Bitcoin. If this is useful, hit the like button, subscribe if you haven't already, and leave a comment with your honest take on BTC. I actually read them. Looking at ratings and signals, a lot of the technical scanners and community sentiment have leaned cautious to mixed for an extended period. You'll see a mix of hold and mild sell readings, especially from tools that track the longer term trend and the position relative to key moving averages. Funding and open interest in the derivatives markets remain the largest in crypto, but the short term outlook from pure chart based sources stays defensive until price can reclaim and hold above recent resistance levels with convincing volume. There is more analysis and coverage for Bitcoin than for any other asset, yet the consensus from technical and sentiment tools has stayed measured rather than strongly bullish. What's going on with Bitcoin right now? The chart has been under pressure for a long stretch. Sell signals keep appearing on the higher time frames, and yet some people still argue this thing is somehow undervalued at these levels. How do those two views even sit together? Let's talk about it. Bitcoin is the original cryptocurrency and the largest digital asset by market capitalization. It was designed as a decentralized peer-to-peer electronic cash system and has evolved into the dominant store of value narrative in crypto, often described as digital gold. BTC is the native asset of the Bitcoin network, secured by proof of work mining and a fixed supply capped at 21 million coins. It currently ranks number 1, with the highest daily volume in the market, and the price has been trading near the levels you're seeing after a multi-month decline from previous cycle highs. On the technical side, the bigger picture remains a clear long-term corrective structure from the much higher levels reached in previous cycles. Price has spent extended periods making lower highs and lower lows on the higher timeframes, with recent action testing support near multi-month levels. Short-term bounces have occurred but have consistently failed to reverse the larger structure with conviction. Momentum indicators have been mixed to weak on the weekly and daily charts, often hovering in neutral to oversold territory without producing strong sustained recoveries. Moving averages on the higher time frames still lean bearish to neutral, and volume has been relatively subdued outside of occasional spikes. Short term, it feels more like a weak consolidation or bounce inside a larger corrective structure than a clean trend reversal. You can argue there is resilience when price holds key higher time frame support, but the overall structure still looks heavy until proven otherwise. That's the classic trap setup. The technology and monetary properties are foundational. The network continues to operate with unmatched security, but the market keeps assigning it a more restrained valuation while attention stays selective. Retail often gets caught here. Buying the Bitcoin is digital gold and will only go up narrative, while the larger trend remains corrective or sideways. Here's the real debate. Is BTC actually undervalued at these levels, or is this a value trap after years of relative underperformance versus earlier cycle expectations? One side points to the fixed supply, the unmatched security of the network, the growing institutional ownership, the digital gold narrative, the halving cycles, the distance from previous highs, and the idea that the hardest money asset should command a higher valuation if capital continues to seek scarce decentralized stores of value. They argue that if adoption keeps expanding and macro conditions eventually favor risk assets or monetary hedges, these levels could look reasonable in hindsight. The other side says, look at the chart and the market structure. Bitcoin has spent long periods failing to reclaim previous cycle highs with the same force. Volatility remains high, and the market has at times treated it as a pure risk asset rather than pure digital gold. Short term, the picture still looks more consolidative and reactive than impulsive. You need to see stronger volume and a clean break of the recent resistance cluster before the short term bias flips with any real confidence. Longer term, it comes down to whether Bitcoin can convert its unmatched network security and fixed supply into sustained demand and relative outperformance as the primary store of value asset. That's the only path that turns these levels into something more constructive instead of just another extended consolidation or grind lower. Risks are still meaningful. Volatility remains present even at this size. A broader risk of move in global markets, continued strength in the dollar, shifts in institutional flows, or a slowdown in adoption narratives can pressure the price further. Downside remains open if the recent support zone breaks and the corrective structure simply continues. Retail traders love the long term scarce digital gold story and end up holding through multi month or multi-year periods of relative underperformance. Liquidity is the best in crypto, but that doesn't eliminate sharp drawdowns. There's also the structural and competitive risk that comes with any dominant asset. Newer narratives, regulatory changes, or shifts in capital preference can continue to challenge relative performance even while absolute network security remains unmatched. Nobody knows which way this resolves. The chart is still fighting the fundamental narrative. The network continues to operate with the highest security in crypto, and the market remains selective about how it prices the original digital asset. So, the real question is simple: is this the kind of asset that can finally break out of its long corrective phase and re rate higher, or are we just watching the largest cryptocurrency settle into a prolonged period of relative underperformance while people argue about valuation? Bull case versus bear case is fairly clear. Best case, broader market risk appetite returns, institutional and retail demand expands, the digital gold narrative strengthens, and price manages to reclaim key resistance levels and start building a higher base. In that scenario, you could see a meaningful recovery toward previous intermediate and cycle highs over a longer horizon. Worst case is the opposite. Relative performance continues to lag expectations, volume and attention stay selective, and the corrective structure simply grinds lower or sideways toward new cycle lows. In that scenario, the undervalued talk just becomes background noise while price continues to underperform expectations.